On Saturday, 28 Feb 2026, the United States and Israel launched major coordinated military strikes across Iran. President Trump confirmed the operation in a Truth Social video, calling it the start of major combat operation, urging the Iranian people to rise up and overthrow their government, and directly warning Iranian troops to drop their arms or face death. Israeli sources, including Prime Minister Netanyahu, stated that Supreme Leader Khamenei compound was destroyed and that there are many signs he is no longer alive. Iranian state media, despite this, claiming their leaders are safe and sound, but multiple Western intelligence assessments align with the Israeli reports. Iran has already retaliated with missiles and drones targeting US bases in UAE, Kuwait, and Qatar. The US embassy in Bahrain has been closed today, March 1st. Iranian Red Crescent report at least 201 people killed and over 747 injured so far, with strikes hitting more than 20 of Iran's 32 provinces. So now let's cut through the noise and talk about what this actually means for your money, because this isn't just another foreign policy story. It's a direct immediate hit to energy prices, inflation, and the value of pretty much everything in your portfolio. So starting with the oil market, because everything else flows from here. Iran sits right on the northern edge of the Strait of Hormuz, the narrow waterway that carries about 20 million barrels of oil and oil products every single day. That's roughly 20% of the entire world daily oil supply, coming from Saudi Arabia, Iraq, UAE, Kuwait, and Qatar. The strait is only about 21 miles wide at its narrowest point, and the shipping lanes are even tighter, just 2 miles wide in each direction. Before the strikes hit, Brent crude had already climbed to a 7-month high of $72.87 on Friday. Analysts are now forecasting an immediate $5 to $10 spike when futures reopen Sunday night and Monday morning. Barclays has publicly said Brent could test $80 quickly and push toward $100 if there's any real disruption to tanker traffic. Eurasia Group, ING, and others are warning that tanker insurance rates have already jumped and some vessels are rerouting or delaying. A full or even partial closure of the strait, something Iran has threatened in the past, would be unprecedented in modern times. And let me pull up the historical pattern so you can see exactly how fast this can move. In 1979, during the Iranian Revolution, oil spiked over 100%. In 1990, with the Gulf War, prices doubled in months. Even the 2019 tanker attack in the same region pushed Brent up 20% in weeks. A temporary loss of just 2 to 3 million barrels per day would already be bigger than the entire Venezuela production collapse we saw earlier this year. So what does this mean at the pump for you and me? US gasoline prices could rise 20 to 50 cents per gallon within the next few weeks. If the disruption drags on for more than a month, we are realistically looking at a national average of $3.50 and potentially pushing $4 in some regions. The average American driver uses about 500 gallons per year at an extra 30 cents a gallon. That's $150 straight out of your budget fill up twice a week. You are looking at an extra $15 to $25 per month just on fuel. Money that used to go toward groceries, rents, or savings. Higher energy costs feed straight into everything else. Airline raises ticket prices, shipping companies pass on higher fuel surcharges, so your Amazon packages and grocery deliveries cost more. Manufacturers pay more to run factories, and those costs eventually show up in the price of everything from bread to car parts. Economists are already warning this could add 0.3 to 0.8 percentage point to inflation reading over the next few months. Exactly the kind of sticky inflation that makes the Fed hesitate on rate cuts. On the investment side, expect a classic risk-off reaction when markets open Monday. Broad indexes like the S&P 500 and Nasdaq are likely to open 1 to 2% lower. Tech and consumer discretionary stocks usually take the biggest initial hit because higher oil squeezes household spending and corporate margins. but certain sectors are already positioned to benefit. The clear winner in the short term. Energy companies like ExxonMobil, Chevron, ConocoPhillips. These names have historically rallied 15 to 30% during major Middle East supply scares. The energy select sector SBDR ETF often moves even faster. Defense contractors like Lockheed Martin and RTX are also seeing pre-market interest because prolonged conflict usually means higher military spending. Remember the $1.5 trillion budget debate we covered last week? This escalation makes those numbers look even more likely. Safe haven assets are moving to physical gold, and gold mining stocks typically rise as investors seek protection. Bitcoin has shown mixed but often positive correlation in recent geopolitical spikes, as some treat it like digital gold. Even the US dollar tends to strengthen in these movements. What to watch this week? Saudi spare capacity, tanker traffic data through the strait, and any statements from OPEC plus. If Saudi ramps up production fast, the spike could fade in 2 to 4 weeks. If Iran successfully disrupts even 10 to 15% of flows, we could see sustained $90 plus oil. Bottom line, the US-Iran escalation that started this weekend is a geopolitical earthquake, but for most Americans, it translates straight into higher energy cost and short-term market volatility. Oil pushing toward $90 to $100 would add hundreds of dollars annually to the average household while pressuring stock portfolios, especially if you are heavy in growth tech. The situation is still developing rapidly. We don't know yet how long any disruption will last or how effectively Saudi and other producers can offset it. But the historical data and current analyst models are very clear. When the Strait of Hormuz is under threat, prices move fast and wallets feel it first. So drop in the comments, are you more worried about higher gas prices or what this does to your 401k and stocks? And what's one small move you are considering this week? Energy stocks, more cash, or something else? I read every comment.